Alright, you guys, so I'm going to review after yesterday, which was the largest down day since COVID. So to understand the magnitude of yesterday, put in perspective, you have not seen a 5%. At one point, we were down 5%, and you haven't seen that since the COVID collapse. And so that should give you some idea of how big a move it was yesterday. It was huge, right? And no one expected it. So, and I think I covered that. So after that, what can happen is, somebody's learning this stuff. You can get like, oh my God, the shit is going to hit the fan. I used to be like that, right? And, I would go into these shorts and end up getting, losing money, I'd buy all these put options back in the day. And so I've learned a lot, and I want to show you some things about why today is the way it is. And so to understand what's moving the SPY, you have to understand options. And if you don't, if you don't know what an option is, I'm not going to explain it. There's a lot of YouTube videos about it. But basically, it's a contract to buy or sell 100 shares of an equity at a certain price by a certain date. And then you guys can go look it up. So we're coming into close, and that's why I want to do this video now. And so this is the closing candle, and you can see we're getting this move up. And I remember talking to you about the importance of this line yesterday, and you could see how that's moving. You can see now you're breaking the upside at close. So, and I think there was like something like 90 million to the sell side at close, and right now you're actually having quite a pump come in. It's kind of cool. So, okay, so to understand what happened today, you have to understand a little bit about an options contract. And so you go over here, this is your options calendar, okay? And if you go to September 16th, you can see that options are expiring. Anytime you see this red, I'm not going to go deep on this. You can learn. Options are extremely complex. It's like learning another language. So for me to explain this all to you guys, that'd be a whole nother channel, a whole nother thing going on. I'm just trying to show you you do not need to know all that. What you do need to know is you have a big expiration coming out. Now there was 81 billion, a record level of put options that were purchased, and they're derivatives. And so if, like I said, if you think trading crypto is risky, every options contract, like in the options world, they'll say it's 30 cents. It's actually 30 bucks. Or if it was $30, it would be $300 to buy that contract. Everything's multiplied times 100, right? It's a derivative of an equity. It's not the equity itself. And so a put option, a lot of put options were purchased, and it's very important. So somebody has to bankroll that. That's the institutions. Just imagine it like a casino, okay? And they sell the option, and if the market tanks, they got to pay out on that option contract, and the losses would be severe, right? And that's why you see, as a trader, you have to start to understand options. It will help you a lot because you'll understand what a short squeeze is and why it's squeezing. A lot of people don't understand this stuff, and I'm going to do my best to just keep it short and not go deep. But on the 16th, we have a expiration day, and there's a record amount of put options. And so, like I had pointed out, the casino, it's better for them to buy here and to hold up the price of the market maker. It's better than to buy, even if they know the shit is going to hit the fan, right? It's better for them this week to just pump money in here to hold this price up. Because if it expires, if these options expire in the money is what they call it, then the casino has to pay out. Just look at it like that. So even though you, as a retail little crypto trader, you might think differently, That's what they're doing right now. And so the other core concept to understand about options is there's something called premium, okay? And so, like I said, you're paying for it's a contract to buy or sell at a certain price in a certain amount of time. And with options, the time is extremely, extremely important. So premium is based on the amount of time that we're buying. If I want to buy a daily contract, it's going to be hundreds of times less than if I want to buy a contract for a year from now that will sell me that option a year from now at a set price, or I can buy at a set price. But if I want to do it on a daily, I'm going to pay a lot less for that contract because there's a lot less time. And so what you see happening right now is crushing premium. Okay, so if you look at today, the market, even though there's extreme risks in the market, because of this options expiration, what the market, what these institutions want to do that sold the options contracts is they want to hold it in this zone. Okay? They want it to come out neutral because that crushes the premium. So if volatility increases, then option premium increases, right? They're correlated like that. So when things get real wicked, like yesterday, the put options, the premium on those, what people would be paying for those goes up. So what the market's trying to do going into Friday is hold this level, even though they're buying stocks that they might think are going to go down. This is very rudimentary explanation, and if you know more about this, don't just understand. I'm just trying to explain to like someone who may never have heard this before. So what they're doing is they need to hold that price up, okay, until the expiration, which is on Friday. I've seen this happen in a big way in my life, and I've learned the hard way on this, and it sucks to be in the money and have your idea correct. And I was correct about a lot of things in 2020. I call it the first crash of 2020 and had an expiration of options that were on a Friday. And then Monday morning, we had the first zero down halt. It was crazy. My account, I probably, at one point, I was up tens of thousands of percent points on this play, right? It was crazy. And the contracts were crazy. It was a wild time. So that's what they're trying to do right now. I just want to share that with you. So why would I think with all this volatility, why did I just go with this little ADA play yesterday when a lot of people would have the tendency to go, oh my God, the shit has hit the fan, short, go heavy on a short because the wheels are falling off the bus, the SPY's going to crash. I know about this options expiration, and I know that as long as that's there, that's kind of going to hold the SPY at this level, and it's going to move sideways until Friday, okay, because of this expiration date. So I'm not expecting any big moves, hence the strategy. Like I said, I want some exposure. If I was wrong, or if the casino can't control it, something big in the world happened we don't know about and it does dump, I want some exposure to that play. But the odds on that happening are very much against me. So I wanted a little light, a couple $100 on some ADA. And this is all my money's on the sideline, by the way. That's where your money should be. But if you're trying to learn, you want to keep a couple grand in an account and learn, that's what this is about. That's what I'm talking about. So moving into Friday, you're going to see the options expiration. What could change that, and what we're watching, is the Fed rate tool. You see how it came down a little bit today? So that tells me we're not going to see anything wild out of Bitcoin through Friday. Okay, so it's like people talk about these lines, but they don't understand what's moving the market. I'm trying to show you this is symbolizing, this move today is all about this. And once you start to understand that, you can make better trades. So there you go. You've got your close 394.61. It closed above this line here. That's why I'm doing this video now. So it closed right above that line. So all these contracts, so if people had bought put options for the 394.24, they're expiring worthless on Friday. Or if you had bought put options saying you think that it's going to, the SPY, which is a reasonable thing to think, right? You would go like this. Oh yeah, SPY is going to break 388. Based on this, you'd go 388. That makes sense, you know? It's probably a cheaper contract. But that's not going to happen because they don't want to pay out. Another way to think about options and why this is important for you to learn how to trade these KuCoin ETFs, which, why am I doing this? I'm just going to talk for a little bit, I guess. So coming from options trading, that's a very high risk, high intensity type of thing to do, okay? And so how I got into crypto was coming from that world. And I looked at crypto and I saw all these people. I'd watch these videos and be like, they don't know dick, you know? I'd really just think, wow, like, how do all these people make money? They don't know anything. And so, with Bitcoin back then, I remember watching these videos back in October, November, calling for this 100,000 on Bitcoin. And I had this line right here where it was sell everything. And I had a bunch of money in crypto and I was doing good. But I had my line. And I sold everything. In 15 minutes, I liquidated my entire account right here at, I think it was actually probably down, it was like 62.9 something is where I actually pulled the trigger. But because I understood what was happening in the markets, and I understood that most of these crypto traders they don't know what's moving the market. They don't understand these macro indicators that I'm trying to explain to you. And so if we go over to the SPY and we will look at what's happening this week and what's to come, everybody knows we're going to get this dump, right? But the options contracts need to expire. And then, so that would lead you to a Monday. So what I'd be doing, what I will be doing, is watching heavily on Sunday night for the dump then, okay? That's something to do. Once you have this big expiration on the options contract, you really want to pay attention on Sunday nights. So the other thing to take note of after this, historic down day yesterday is this gap. And so you've heard people talk about a gap fill. And so my expectation, if this moves to the upside, there's two ways this can play out going into next week. Either you hold above this orange line, you come up and you fill the gap here, and then come down, and you stay in this little sideways pattern for a bit, right? You kind of stay in this range and trade this range, until October. That's possible. And you could kind of get trapped here. But you see how it will squeeze, and remember me showing you the video where when price squeezes, it will break to a side. And my bias at this point would be a break to the downside. So that's one way this could play out. You get the gap fill, and then it kind of consolidates sideways. Okay? That's with the options expiration coming in, you could get the gap fill. Now, you can also have this move to the gap fill, consolidate down to this blue line, and bounce higher. Okay, and this is over the next couple weeks. And then you would come into this problem. You see that little gap there on the left? You probably come right into this range here, which would mark the top of this much larger macro pattern. Okay, so you see, oops. So you see what I'm saying here? Top, and then you get the dump, which is the one we're playing. That's what I'm looking for, right? That's why I take the time to do this, to watch, because I'm watching for myself. When are we going to hit this top, right? So you can have the top come in here on this gap fill. Okay, so this might be it. Right there might be your top. That's what we're watching for right now. Are we going to get this kind of like W pattern, and then we don't break back above this line? And this is going to come into next week's news with the Fed. Or do we get one more push higher moving into October, which was what I originally thought because of the political ramifications of all this, that they need to keep this market propped up until November 8th. And then you get the selling pressure to come in, and you break the lower low. And so that's what you're looking at right now. I just want to share with you like the importance of understanding options, and you should have it marked, right? And that's why I'm not going heavy, because I'm waiting for this larger macro pattern to play out on which is going to, of course, affect Bitcoin. So though I get excited and you want to short, I'm going to play this very carefully in this range, because you're really in no man's land, right? And so that's why this idea I have where, look, it was only a couple $100 I threw into this ADA trade yesterday. I'm very confident that we're going to see new lows on Bitcoin. I don't think the selling is done here. So we can't predict it all. That's the other thing that I'll say about this is, if I could have predicted, that's why you want to collect this ETF, right? Because if you're trying to call every move with the way the world is, I've seen this so many times, and I'm good, dude. I'm on point with a lot of this stuff. But you're not going to know, or I wasn't awake, actually. I was like, I'm going to sleep through this. You're not always going to be at a computer to make that trade. So that's why I'm okay. I bought $200 of some ETF here. I bought some up here, and then I'll go heavier if it comes back up here. But if something popped off in the world, and all of a sudden, because that's the kind of environment we're in such a turbulent time, you could get a dump tonight. You don't know. There's so many things that could happen. There's this railway strike. The market could dump on Friday just based on that news. There's Taiwan is pushing the European Union to put sanctions on China. China has lockdowns. Like, any one of these news catalysts could cause one of these bigger dumps, and so that's why you want to be and have some exposure. That's what I mean by that. So anyway, guys, I hope that helps. I'll take one last look. VIX is down, so that reflects what I'm saying. TNX. So look, exactly like I tried to tell you guys. Boom! It came right into that line and comes back down. And so on this, what you're looking for coming into Friday, I mean, it's not going to look like that it would take a month, but if you get back down to like somewhere below this white line by Friday, that's bullish for the market going into next week. Germany down. Okay, so natural gas. All right, this is important. So with the market coming down, you see this gap up, and I'm just doing this like real time. It's kind of what I do. So you see that gap up. What that tells me is that if the market continues, so I'll be watching this coming into Friday, right? Long video now. So if you made it this far, good for you. So check this out. And if this continues up, if this gas price continues up while the market's continuing up, that's a bad sign for the market. These kind of need to work inversely. So I'll be keeping an eye on that. Look, up 8% today. That's a move, dude. Something to pay attention to. This is stocks. This is Europe. Basically, I keep an eye on that. If I saw, and I got an alert here, if there's a dump on the European markets, I want to know. And then I got soybeans, which are commodity. Look at that rip on soybeans. Corn. Look at that rip on corn. So those are the things I'll be watching is what is happening. The ones that interest me right now at close are watching what happens with the TNX coming into Friday, and then what's going to happen with these gas prices. That's really super important right now. And of course the options in this, you know, this is the most important thing. And then the options I explained, 22222 angel number. So that's pretty much it, guys. If you have questions about it, you can let me know. And yeah, I hope that all makes sense. And what they're doing is crushing premium right now, because if it is going to dump, they don't want to pay out on those contracts. All right, peace.